If I had a dollar for every time someone asked me how much money do I actually need to buy a house, I could probably buy a house. And honestly, the confusion is totally understandable because the real answer isn't just your down payment. There are layers to this. In this video, I'm going to walk you through every single cost you need to be prepared for when buying a home. Down payment, closing costs, prepaid expenses, moving costs, and the reserves you need left over afterward. I'll also tell you about the programs that can drastically lower what you need up front, and I'll give you a real savings target based on different home price ranges. Grab a notepad. This one's worth writing down. Let's start with the biggest chunk. The down payment. This is the portion of the purchase price you pay out of pocket. The rest gets financed through your mortgage. The old school advice was always 20% down. On a $350,000 home, that's $70,000. That's a significant amount of cash that takes years for most people to save. But here's the good news. 20% is not a requirement. For conventional loans, you can put as little as 3% down with some conventional loan programs like Fannie Mae's Home Ready or Freddie Mac's Home Possible. On $350,000, that's just $10,500. With FHA loans, these are backed by the Federal Housing Administration. You need just 3.5% down if your credit score is 580 or above. If your score is between 500 and 579, they require 10% down. With VA loans for eligible veterans, active duty, and surviving spouses, that's 0 down. This is one of the most powerful financial benefits available, and a lot of veterans don't even know they qualify. For our eligible rural and suburban areas, we have USDA loans, which are also 0% down. More areas qualify than most people think. So the down payment range is literally 0% to 20+%, depending on your situation. The caveat, anything below 20% down typically means you'll pay PMI. Private mortgage insurance, but we'll talk about that in a moment. Here's the cost that surprises people the most. Closing costs. These are fees paid at the closing table to finalize your mortgage and transfer ownership. They typically run between 2% and 5% of the loan amount. On a $350,000 purchase with a $330,000 loan, that's between $6,600 and $16,500. Let me break down what you're actually paying for. A loan origination fee, that's your lender's charge for processing the loan, anywhere between 0.5% and 1%. Appraisal fee, a licensed appraiser values the home, that's anywhere between $400 and $700. Title search and title insurance confirms the seller has clear ownership, anywhere up to $2,000. Attorney or escrow fees, which varies by state, anywhere from $500 to $1,500. Recording fees, filing the deed with the county. Prepaid interest covers the interest from your closing date to the end of the month. Homeowner's insurance premium, the first year often paid at closing, and that depends on your insurance policy. Property tax escrow, lenders typically collect 2 to 3 months of property taxes up front. Quick pro tip, you can negotiate with the seller to cover some or all of your closing costs, called a seller concession. In a buyer's market or with a motivated seller, this is very achievable. So private mortgage insurance, or known as PMI. If your down payment is below 20%, most lenders require PMI. It protects the lender, not you, if you default. Cost is typically 0.5% to 1.5% of the loan amount annually, added to your monthly payment. On a $330,000 loan at 1%, that's $3,300 per year, or about $275 a month extra. The good news is once you reach 20% equity, you can request PMI removal. Home inspection. Before you close, you should always get a home inspection. This is separate from the appraisal. A good inspector checks the structure, roof, electrical, plumbing, HVAC, and more. Budget between $300 and $600 for that. Moving costs are often overlooked. Local moves could be between $500 and $1,500. Long distance moves can be between $3,000 and $8,000. So don't forget to factor this in. Emergency reserves. After paying your down payment and closing costs, you should still have 2 to 3 months of mortgage payments in the bank. This is sometimes required by lenders, but is always smart as a homeowner. So let's put all this together with real numbers. I'll use a 5% down payment and 3% closing costs as a baseline. $200,000 home, a roughly $16,000 needed between a $10,000 down payment, $6,000 closing costs and reserves, $300,000 home, roughly $24,000, $400,000 home, roughly $32,000 needed, $500,000 home, roughly $40,000 needed. But these, again, are conservative estimates. Down payment assistance programs in your state could reduce this significantly. I'll drop a link in the description to the HUD website where you can search programs by state. Here's the bottom line. Most people need somewhere between $15,000 and $40,000 to buy a home. But with the right programs, some buyers can close with much less. The key is knowing your target number and having a plan to reach it. Start by talking to a HUD-approved housing counselor or a trusted mortgage lender like myself to get your personalized estimate. It's free and it changes everything when you have a real number to work toward. If this helped you, drop a comment with the home price range you're targeting. I'd love to hear where you are in this journey. Like this video, subscribe, and I'll see you in the next one.